welcome to the Ichimoku daily analysis for the S&P 500 for Wednesday, June the 13th, 2012. Well, a change of trend again today, change of trend to the upside with the candle making a higher high and a higher low, and once again on a candle that's not supported by the buyers, a black-bodied candle where the sellers have taken control for the trading day. And we've seen that over the last 4 or 5 trading days, where the trend has changed and the opposite side that changed the trend has been supporting or not supporting the move. Today, trend to the upside, the sellers have taken control, the buyers have lost commitment, as opposed to the previous day where the change of trend was to the downside but the buyers took control. This highlights the indecision that we have in this market at the moment, where we have this chopping and changing and lack of commitment by either side, really lack of commitment once the trend changes. The market is in equilibrium, it's forming a congestion area, and little wonder that the market's trading around the Kijun-sen, which represents equilibrium in that medium-term time frame. Now there is potential for a couple of patterns to develop here at the moment, and this pattern that we have forming in this tight congestion area that we're seeing now is some sort of a wedge pattern. It's a fairly large wedge, but here we have the market making lower lows, lower troughs, lower peaks, and they're actually converging if we draw the lines on them, and it's a fairly large wedge. Here we have the prior trend. Essential for any pattern is a prior trend and then the congestion. This tends to be a continuation pattern, so we really should be looking for a breakout to the upside, although they can actually be reversal patterns, but usually continuation patterns. But really what we need to do with these congestion areas and these patterns is wait for the breakout, and the breakout will not just be a probe beyond the level, it'll be a close beyond the level. And what we'd also like to see is the buyer supporting a close to the upside if there is an upside close, or the seller supporting a close to the downside. The only trouble with this is if we do have a breakout to the upside, we do have strong resistance overhead. So now where the market will be trading tomorrow will be around the 1324 area, and if we see a breakout we have resistance at 1333, and we know that that's a strong level. We're also trading against a higher time frame trend with the market trading below the cloud, so there is a limit to the extent of this trend. But if we look at use the measured move, if we see a breakout from this area, then the target would be somewhere up around probably about 1370 or higher, near the top of the cloud. So that is a possible scenario, but quite some very strong areas of resistance on the way up there. We also have potential for a larger pattern here, and here we have a prior trend. Here we have a left shoulder ahead and formation of a right shoulder, and it's a complex type of head and shoulders, inverse head and shoulders pattern. 2 troughs within the left shoulder, and we're now forming 2 troughs, it seems, within the right shoulder. And I've drawn a neckline across here, and completion of this pattern would not be just a probe beyond there, but it would be a close beyond that barrier. The target would be the length from the neckline to the bottom of the head projected up, so that would be quite a substantial move if we do see that. But considering the way that this downtrend has developed, it wouldn't surprise to see that that occur and retrace substantially into this very strong downtrend that we saw. In terms of the Fibonacci extensions that we've been looking at recently, what we're examining at the moment is the current uptrend in relationship to the prior uptrend, and the market has halted at the 61.8% level, so that could be significant selling coming in. So strong potential to see a change of trend once again for tomorrow's trading. If we do see that, we could be making another swing low within that congestion area perhaps. And in terms of the Fibonacci retracement of the previous downtrend, now that we're trending up, the market has also halted at the 61.8% level here, with the market failing to close beyond there and rejection from, so a very strong chance of a change of trend back to the downside. In terms of Ichimoku, obviously we have a bearish market in the long-term time frame by trading below the cloud. The market is just bearish in the medium-term time frame by trading below the Kijun-sen, but only just. We have the market hovering around the Kijun-sen, oscillating above and below there. So that's quite significant, and as I've said, highlights the fact that the market is in equilibrium within this medium-term time frame. Now, markets don't stay in equilibrium all the time. We will see a breakout eventually, and we have this pattern forming, and we will see resolution of this equilibrium in the breakout above or below the boundaries of the pattern that have been drawn, which is some sort of a wedge type pattern. In terms of the fast term time frame, the market is trading above the Tenkan-sen here, and here we have the green line. We've been trading above there for some time, and we should expect that area to hold as very strong support for this market. So if we do see a breakout to the downside below this wedge, strong support at the round number 1300, extending to 1295, and then down to this swing low around 1290. So very, very strong support down below. More likely that we will see a breakout above, because this is usually a continuation pattern, but let's just be patient, wait for resolution of this market at the moment, resolution of this indecisiveness that we're seeing with this congestion area.